I want to talk to you about something that happens to a lot of successful business owners, but almost nobody talks about. Your revenue is growing, your business is growing, and your clients, they're coming in, everything is going well. However, tax season arrives, the number you owe the IRS makes you feel like the harder you work, the more you lose. If that's ever happened to you, your tax bill isn't the real problem. It's a symptom of what's happening inside your business structure. And once you understand what that system is telling you, you can start changing what your taxes actually cost. My name is Precious Rutland. I am the tax saver's best friend. I spent 2 decades managing $14 million in federal funds, auditing for risk and compliance, training and fraud detection, inside financial systems most business owners never see. Now I help 6-figure owners, entrepreneurs stop overpaying the IRS by $15,000-$30,000 a year by building a tax strategy that changes what costs. So when the bill arrives, they're not surprised. So now let's get into it. Here's what your tax bill is actually telling you. It's not telling you that you made too much money. It's telling you that your business structure hasn't kept up with your revenue. So think about it. When you started your business, you probably set up a sole proprietor or an LLC because that was easy for you at the time. It was affordable, like it just made sense. You were getting started, you needed complexity. You needed simplicity. But here's what nobody told you. The structure that gets you started is not always the structure that keeps you profitable. And this is called self-employment tax that I'm talking about. It's 15.3% on your net profit. So most business owners know about it, but they don't realize that a specific structural change at the right level can legally reduce how much you pay in taxes. Not eliminate it, but reduce it legally and significantly. So I'm not going to tell you exactly how to do it in this video. That's not what this video is for. What I want you to understand is right now is that your tax bill grew because your tax strategy didn't grow with your revenue, but that's fixable and it's not complicated, and it requires someone looking ahead and not filing what happened. So here are 3 signs that I want to give you as far as your tax strategy that hasn't kept up with your business. And if any of these signs sound familiar, keep watching this video. Okay, number 1, your revenue went up, but your take-home pay didn't. You made money this year, more money this year than you did last year, but when you look at what actually landed in your personal bank account, it didn't feel that way. And if that's you, this is a structural and strategy gap. So it's not a revenue gap. So that's number 1. Number 2, your accountant files your taxes, but you haven't had that planning conversation all along. Now, that's not an accountant problem. That's simply a tax strategy problem, because filing your taxes accurately is real and it's a real service. But filing is compliance, planning is strategy. And if nobody is thinking ahead for you, adjusting your quarterly estimates, looking at your entity structure, identifying what you should do before December 31st hits, you're leaving money on the table every single year. Sign number 3, you've been putting off this decision long about your business structure because you fully didn't understand what your options are. Like, for instance, you may have heard of S Corp election, maybe you've Googled it, but nobody sat down with you and explained what it actually means for your business at those specific numbers, at that specific revenue level. So you keep that business structure you have because changing it feels complicated. And I want you to know that delay is what's costing you every single minute, year that you wait. Now, here's what I want to give you. I put together a guide specifically for 6-figure business owners, people earning between $100,000, $750,000, that walks you through the 25 deductions that are most commonly missed at your revenue level. It's not generic deductions that you can find on Google. These specific ones apply to your revenue in that range when you have a team, when you're running real operations. The ones that show up in my client audits that nobody told them about it before I did. So now it's called the 6 Figures Owner's Guide to Tax Write-Off, and it's linked in the description below. It's $29. That is less than 1 hour of any professional's time, and it will show you more opportunities than most people find in a year in Googling. If you watch this video and you do nothing else, go grab that guide, read it tonight, bring it to your accountant at your next appointment, or even ask them which of these situations apply to my situation. That single conversation could change what you owe this year. And last but not least, your tax bill is not your destiny. It is the result of decisions, some you made, some nobody helped you make, and every single one of them can be addressed. If you're a business owner, you're at $100,000 or more, and you've never had a real tax strategy conversation, not just a filing conversation, but a real strategy conversation, you are the person that I have built this channel for. So I'm going to ask you to make sure that you subscribe. The content I put here is free. The guide is in the description. It's $29. And if you want to go deeper, if you actually want someone to look at your books, tell you where your money is going, I do that too. All the details are in the description below. My name is Precious Rutland. I'm the tax strategist. I'm tax saver's best friend. And I'll see you in the next one.